doing the pre-budget show Budget Hotline. I'm Faye DSouza. Thank you for tuning in. Like I promised you, right up to 2 weeks before the budget, we're answering live questions every day at 6:30 p.m. And we're answering questions about tax, about real estate, and about investments. Well, today I'm going to focus on tax, and to help me answer those tax questions, I have a very special guest joining us right now. Kuldip joins us in Noida. Kuldip, thank you so much for joining us. Happy Republic Day to you. Thank you for coming in on a holiday. I hope that, we get a lot of fantastic questions today, and we'll make it worth your while. Saeed Ali, I understand, has already sent us an email. I'll start with that one. He says, please advise on how to calculate short and long-term capital gains on debt mutual funds for the period of 2012 to 2016. Well, Kuldip, last year, we saw the government change the tax treatment of debt mutual funds on what quantifies as long-term vis-a-vis what was long-term earlier. Now, for someone who, like our viewer, has invested between 2012 and 2016, how should they calculate the tax that's going to be due?
First of all, happy Republic Day to you as well, and thank you so much for calling. And I hope that, you know, we too get the good question to answer, so today being the holiday. And in relation to the debt-oriented mutual fund, you know, if these are held for less than 6 months, if it is a short term, then those are subject to tax at a normal slab rate would apply. But assuming that if these debt-oriented funds are held for more than 3 years, then they will be treated as a long-term capital gain and would be subject to 20% tax rate, and the benefit of indexation would also be available.
All right, so you will get the benefit of indexation, but it is a benefit that's a little difficult to explain to you here on television. It basically takes into account inflation on any asset that you might hold before you calculate capital gains tax. Effectively, it brings down the tax that you're going to have to pay. So ideally, what you should do is speak to a tax consultant before you decide what what your tax outgo should be. Your tax consultant will also help you calculate what tax you have to pay and what you can do to avoid that tax if it is long-term capital gains tax. In the meantime, our phone lines are open. There'll be a phone number, there it is on your screen right now. If you have a question about tax at all, about what you can expect in the budget, or how that should change your taxation and the tax that you pay, feel free to get in touch with us. In the meantime, Monimala Das has written in from Kolkata. She's a 30-year-old working woman. She's recently booked a flat in Kolkata. Well, congratulations, that's very impressive. She says the cost of the flat is around 45 lakh rupees and she wants to purchase this in her name, and she wants her husband to be the second applicant. Being the second applicant, will her husband be able to take a home loan from the bank? Will he be eligible for the tax exemptions? Well, Kuldip, the first thing is, for young ladies like our viewer, like Monimala, who's written in, if they're the first applicant on a home loan, they actually get a preferential home loan rate from a lot of banks, which is, you know, a very good thing. Her husband will also be able to borrow and claim the tax benefits, won't he?
No, absolutely. You know, the deduction in relation to the house purchased or the interest that they will be repaying if they have taken the loan would be eligible to those who has financed the house. So assuming that if the house is in the name of the wife and the husband has funded the house, so the husband would be able to claim the deduction for the interest he will be repaying back on repayment of the loan, and the condition is that he should be the co-owner in the house.
All right, so remember that you can both claim the tax benefits, so it does make sense. What you have to keep in mind though, Kuldip, is how those EMIs are being paid, because they're going to have to show that it's coming out of both of their salaried accounts. What's the best way to do that?
No, absolutely, and let me explain that in little detail. Assuming that if both the husband and wife are paying the EMI, then they both would be eligible for the deduction for the interest as well as the principal amount which they will be repaying. For the principal repayment, the deduction is available under Section 80C, and this deduction would be available to the proportion of they have funded the house, they have the ownership in the house, and for that the EMI need not necessarily be paid out of their separate account. And assuming that they have a joint account, and if the payment is made out of that, and the joint account is funded by both the husband and the wife, so that would be enough to claim the deduction, both of them, in their respective returns.
When you take a joint home loan, you'll actually be able to double your tax benefits really from that home loan, which is why as advice to all couples, it does make sense to jointly own the home that you're buying and borrow jointly as well so that you can double your tax benefits. Anup has written in from Mumbai. He's a salaried employee. Now he says usually he manages to save about 1 lakh rupees under Section 80C as he has a home loan. But apart from these sections, anything else he can do for tax saving? Well, first of all, Anu, you can save 1.5 lakh rupees under Section 80C as of last year. So that's a good thing. Plus 2 lakh rupees on the interest that you pay on your home loan. Other than that, Kuldip, health insurance, NPS, there are other options, aren't they?
Absolutely, you are bang on point. And if you know, the NPS is a very good scheme, and in the last year budget there was a special incentive that if you invest 50,000 rupees in the NPS, I mean in addition to the 1,50,000, so you will get deduction of that additional 50,000 rupees as well. In other words, on top of Section 80C of 1,50,000 deduction, you are also eligible for an additional deduction of 50,000 rupees if the investment is made in the NPS.
Well, you can, of course, do the NPS, and remember there's a health insurance deduction that you can claim if you buy health insurance for yourself and your family. There's an added deduction if you buy health insurance for your senior citizen parents. So there are lots of things you can do to save tax, and we are hoping that in this budget that the finance minister will give us more of an option to save tax than what we have right now, because generally the feeling is that 1.5 lakh rupees is still inadequate. On your screen right now is the deduction available if you buy health insurance for senior citizens. Sudanand is on the phone line from Cuttack. Sudanand, go ahead. What's your question?
My query is, I know dividend on equity mutual fund are tax-free, right? So do I need to declare that in my tax return form, or no need for that?
Any sort of income, Kuldip, any sort of income will have to be declared on, while filing taxes, right? Whether or not it's tax exempt?
No, absolutely. This will go to the exempt income schedule. So, for example, if you are having a interest on the public provident fund or a dividend from the equity shares, or if you have sold any listed security like shares or mutual fund, etc., and that capital gain is exempt. So, even though that capital gain is exempt, but it will have to be shown in the exempt income schedule to the return.
All right. And of course, if we talk about tax on equity funds, Kuldip, there is a little bit of nervousness as far as the tax on equity funds is concerned. Do you think there's a possibility that long-term gains might get taxed in this budget, or perhaps dividend might get taxed further? Are you expecting any sort of change at all on tax on equity?
Well, it's a very challenging question. I mean, if you see the post demonetization, and particularly there is a huge amount of expectation, be it the businessman, be it the farmers, be it the salaried class. So now the important question is that, of course, there has been a healthy growth in the tax collections so far, and the personal tax collections have grown by 21%. But the point is that still, the coming times are still uncertain, and if government is going to give the relief, so from where they are going to make up for that? I mean, the money ultimately has to come from the taxpayers. And this is also the fact that there are only 24 lakh taxpayers who are paying, who are filing tax return more than 10 lakh. And then there are almost 83 or 84,000 individuals who are filing return more than 1 crore. So keeping in mind the fact that still there is a apprehension that probably not all the taxpayers are paying the taxes. So there is a greater need to expand the tax base so that, the government is able to extend the tax benefit to everyone. And this is also the fact that, almost 1% of the rich of the India own almost 57 or 54% of the wealth, and which actually is held by 74% of the bottom population. So while there is a disparity between rich and the poor, and you would have seen our Prime Minister or the Finance Minister, they have come out with a statement that still in terms of compliance, not everyone is paying the taxes, and so in my view, so let's see that if the bounties will go in the form of giving the exemptions to the salaried class. So somewhere, the money will have to make it up. So let's see that. So, but I am not expecting that probably in this budget, government is going to touch too much on the capital gain tax or on the other side of thing. But if suppose if they want to collect more taxes, it is quite possible that, for example, they may increase the security transaction tax SST, for example, which can get them some little bit of more money. But it will only the time that will tell actually what will come out of this budget.
Well, if the government is considering taxing any sort of equity holdings, given the fact that India's equity holdings, again, the penetration is not really great. 2% of India's total household savings actually go into equity, direct or indirect. Everything else, either goes into real estate or in gold or fixed deposits. So if the government wants to encourage equity holdings, it's going to have to perhaps not tinker with the tax benefits. And if it really has to, then maybe separate the small investors from the really large ones, the big fish that you're trying to catch. Let the small fish through that net. We're going to take a quick break. Kuldip's going to stay with us. We'll come back on the other side and answer more questions. In the meantime, our phone line is still open. Don't go anywhere. You're watching Budget Hotline here on ET Now. I'm Faye DSouza. Thank you for staying with us. We're answering your questions live on the show. Phone number is going to be on your screen in a bit, and you can get in touch with us if you have a question. Kuldip Kumar, PwC, joins me as well. Kuldip, we have Vivek on the phone line, but before I get to his question, I have a quick question for you. There has been a recommendation from what's called a banking transaction tax. And we know previous governments had considered this as well, which is basically to discourage people from using cash. Every time you withdraw cash from the ATM, there'll be a tax on it. So the government can track the money and, of course, limit the amount of money being withdrawn and used as cash. Do you think that's a possibility? Will the government actually go through with that in this budget?
Well, in the past also the government has used that, but of course this was not a mean of collecting the tax. Rather, it was a mean to discourage the withdrawal from the cash from the bank account. Now, the fact that if you will see that the SIT committee, the fifth report has also recommended that, there should not be a business cash transaction in excess of 3 lakh rupees, or the cash holding should be capped probably to about to 15 lakh rupees or so. So, to my mind, I think, the fact that the government is actually encouraging to use the online transaction or digitized transaction, and for that they have also given a tax rebate to the small retailers, that if you are having a business and if you are doing a digital transaction, then the presumptive tax instead of 8%, 6% would apply. So on the one side, we will see that some encouragement would be there for the digitized transaction. At the same time, there may also be a possibility that government probably may levy tax, if an amount beyond a certain limit is withdrawn. But I think that, before such a move is taken and still people have come out of this demonetization experience, I think it would be good that if some white paper of a public, a document is put in the public domain for a discussion, and where, the government also seek the opinion from the public or what kind of a difficulty, it may pose, because there are still certain businesses, or particularly in the rural area, where a lot of transaction still, takes place in the cash, and those difficulties are there. I think that probably if those things are also addressed and in some sort of a balancing act, if not this year, probably get ready that this sort of a levy may come, if not this year, probably next year.
Well, Kuldip says we need to be prepared there for a banking transaction tax, which is a tax on cash that we withdraw from our bank accounts. If not now, then at some time in the near future. Vivek is on the phone line from Hyderabad. Vivek, thank you for holding. What's your question?
Good evening, sir. I have 3 quick questions. One is regarding the HRA policy. Okay, in the current taxation system, the HRA policy of up to 1 lakh, okay, we need not furnish any of the bills. Okay, if it is above 1 lakh, then it is mandatory that we submit the rent agreement and all sort of things. So, is there any chance that in the current budget there is going to be some relaxation, especially if it is for those who are in the metropolitan cities, or anything specific to that?
It's a very good point you're making there. The fact that 1 lakh rupees, I think it was 60,000 rupees of HRA for a metro city, for one of India's big cities, is hardly anything as rent. Kuldip, do you expect tinkering with that? But normally, the finance minister tends not to tinker with something he did last year. Do you expect a change in HRA limits?
I don't think that he will go for in meticulously in those kind of details. And the fact that the property value has come down, and there is also pressure on the rental income. The rental income has also declined, on the property. So that probably may not merit for an increase, or probably this will go untouched. But the other point that, where the house rent is being paid is more than 1 lakh of rupees, then the individual has to provide the PAN number of the landlord. So I don't think that, when you furnish these details in Form 12BB, there may be relaxation on that, because what government is trying to do is that all of your transaction which you are doing, making payment, receiving money, etc., they are linking with each other, so that they have a watch on the transaction. And you will also see the trend, by the way, that in the recent time, the scrutiny cases which has been picked up for audit, and those are purely transactional based. For example, if someone has done a mutual fund transaction, or someone has bought or sold a property, so only for those specific points the scrutiny is being done. So I think that going forward, the more focus is going to be on a transaction based, the assessment government will be doing, and keeping in view these things. So if anyone is paying rent more than 1 lakh, or mentioning of the PAN requirement, etc., so you will find more stringent rather than giving any relaxation on that count.
Well, Divakar is also on the phone line from Chennai. I want to very quickly take this question. Divakar, thank you for calling us. What's your question?
Yeah. See, on the educational loan, the problem is educational loan stands at around 14% plus. Plus, again, that has not been given any tax benefit. So is there anything going to be looked at in 2017?
Well, education loans do have a tax benefit, Divakar. Are you asking if that tax benefit will be increased?
The full amount is getting tax benefit, you are saying?
Well, the interest payment gets tax benefits. Kuldip, are you expecting an increase in that? The principal is not deductible, just the interest payment is on education loans, right?
Yeah, absolutely. There is no benefit on the repayment of the education loan, but the interest which the individual is repaying back, that is eligible for deduction in the year in which the interest is paid, up to a maximum of 8 years, or earlier when the loan is fully repaid. So there is a deduction available only for the interest. There is no deduction available for the principal repayment. So I don't think that probably even this would be another item probably which could get taxed. But of course, one of the thing I would in my wish list is that in order to encourage the higher education of the girl child, so I think government should consider giving some sort of a concession where the loans are taken for the higher education of the girl child.
Right. So if, for example, but there are some banks that give a preferential rate, but Kuldip actually says that the government should consider preferential tax treatment for higher education of young girls. That would really be helpful for the country, and that's a great suggestion, Kuldip. Unfortunately, I've run out of time on this show, and I have to wrap up this discussion. Kuldip, thank you so much for spending time with us this evening. We are, of course, looking forward to that big budget announcement on Wednesday, the 1st of February. In the meantime, if you have any questions, we'll be here every day at 6:30 to answer those questions. On your screen right now is our phone number. That's how you can get in touch with us. Thanks for watching.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.